Welcome everybody, and this is our second lecture. So whatever I said in the first lecture, you are very clear, right? 600 pages notebook should be there with you, correct? Second thing I said, black pen should be there. Ruled notebook book I said, everything you would have prepared, correct? After that, books for our course will be delivered to your doorstep I said, and I also said to you all video lectures will be there with unlimited views. And we are not teaching CA problems and asking you to write CMA exams. Every question of CMA is covered, whether it is from StudyMat or from RTP, MTP, PTP, whatever it may be, including amendment based questions I have adopted from some other author books based on the current amendments which are applicable for your exams. So with all this, I am confident that you are going to get 80 plus. 60 is guaranteed for you if you focus. 100% dedication if you give, result is going to come. Let's focus on the new topics now. I want to keep these lectures in a limited hours pattern. Like example, if suppose 300 350 hours you have to listen to complete single subject, it would become huge for you. So total direct tax plus GST will be recording in 200 hours. For that, you have to concentrate. Every aspect will be covered in detail. No time pass, no musty, only subject. That's what I believe in, right? Some light-hearted moments will be there, but ultimately subject should be the area of focus. Because today's learning is earning for tomorrow. Today's learning gives wisdom for tomorrow. Today's learning should bring humbleness tomorrow. And all that we will be trying to build in our personality and getting confidence over the subject, expertise over the subject. Come to the topic, assessee. Assessee is given in section 2 clause 7. Okay. You may say, who is assessee? Now, to call a person as assessee, first he should become a person. And person is covered under 2 clause 31. We'll discuss about person in detail. But who is assessee? Let me tell now. Person is very easy, right? Any individual is a person, company is a person. So, person you know. But who is assessee? A person who is liable to pay tax is an assessee under section 2 clause 7. Now, who is liable to pay tax? That means, is it optional or compulsory? Compulsory. So, a person who is liable to pay tax is called as assessee. Now, he may have to pay not only tax, but sometimes if there is a delay, then he may also have to pay some interest. He has done some default in following the income tax law. So, he may also have to pay penalties. So, if a person is liable to pay tax or any other dues like interest or penalty, then he is an assessee. Now, whether any court proceedings, right, legal proceedings on such person is going on or not, doesn't matter. But is he liable to pay tax or any other dues under income tax? If yes, he is an assessee. Okay. Now, you may ask me, ki sir, you are telling he is an assessee, but what shall we do with it? I'll tell you. देखो, in India, our Bharat, more than 140 crore people are there. Now, do all these people pay tax? The answer is no. Around 6 crore people file income tax return. Yani, give declaration of their income to the government. That means these people who give declaration to government that our income is this much, and in that also only around 2 crore people pay something to government in the name of tax. So these people who give declaration, are actually the assessees. These people who pay tax are the assessees. Income tax department has nothing to do with all the 140 crores population. They want to deal with those people who actually have income and are paying tax to government. That's why this term assessee is coined. Now section 2 clause 7 says a person who is liable to pay tax, a person who is liable to pay any other dues, whether it is interest or penalty, is an assessee. Now the court proceedings are going on, income tax legal proceedings are going on that person or not going on that person, doesn't make a difference. He is an assessee. Now, second type of situation. If suppose a person is there on whom income tax proceedings are conducted. Now, sometimes what happens, you don't have any income, you simply say to the government that I don't have any income, so I'll not be liable to pay taxes. But suddenly one day, income tax department did search at your premises because they believed that you have income but you are not disclosing it, not showing it to the income tax department. Now some proceedings are conducted on you, correct? So if some proceedings, income tax proceedings, whether it is searching your premises or seize your assets, right, whether some inquiry is there, all that if it is happening with you, then you are an assessee. Now whether you have to pay the tax or not pay the tax doesn't matter, but if proceedings are conducted, you are an assessee. Okay, this is second point. Third point, I'll tell you. Suppose father earned income but father died, right? In that case, who should pay tax for that income? Obviously his children has to pay the tax. So a person who represents and pays tax is a deemed assessee. Suppose I'll tell you one more case. Company is into liquidation. Liquidation means closing down of the company. Winding up means closing down of the company. So liquidation is another word, winding up another word, closing down is very natural for you, right? So if company is in closing down stage, then the court appoints a person called as liquidator. He will sell all the assets of the company and pay all the loans to the extent possible, repay the money to all the parties as per the law. So now during this whole process, company has to file return. But can company file? The answer is practically difficult, right? In that case, the court says that even income tax returns should be filed by official liquidator, the person who is appointed by the court. That means who is representing the company? Official liquidator. So this official liquidator is deemed assessee. Father earned income, father died, so child became the deemed assessee. Okay, right. Suppose example, Ram Janmabhoomi. Ram Janmabhoomi Mandir is created. Now, wonderful Prana Pratishta we experienced. It was a great holy experience. Now, if the trust has to file returns, then the trust will become a person, but trust will become the assessee, right? But trust cannot walk and talk, correct? And that's why on behalf of trust, the trustees will be talking to income tax department. Trustees will be filing the returns. Are you able to understand? So trustees are the deemed assessees. Okay. Now let's come to the fourth point. Sometimes the assessee, the person, has to actually file return, actually pay the tax, but they are not paying the tax. So we can say these are people in default. So they are not following the law, so they are defaulters. So if somebody is an assessee in default, then they are also assessee. There is a complicated thing for you as of now, but still I'll try to explain. You do a job in a company. and you earn salary income, your company, your employer has to deduct some tax from your salary and pay that to the income tax department. Okay, who will deduct? Your employer will deduct. From whom? From your salary. So will they pay total salary to you? No, they'll deduct tax and balance salary they will pay to you, and tax they will deposit with income tax department. Now this is the duty of your employer. If suppose if the employer don't follow this, don't deduct the tax, don't pay the tax to the government on your behalf, then your employer is also assessee in default. Okay, clear? Very good. So who is an assessee? We completed the discussion. Let me again repeat. Assessee, in which section it is covered? Section 2 clause 7. A person who is liable to pay tax or any other dues under income tax is assessee. A person on whom income tax proceedings are conducted, whether it is sending a notice, whether it is search of premises, seizure of assets, anything, then the person becomes assessee. A person who represents the other, like liquidator represents company, son represents the father who is dead, or a minor child earning income, he cannot file return, he is minor child, so his parents will file return. So parents are the deemed assessee for the child. And last, if somebody defaults in following income tax law, they are also assessees. So section 2 clause 7 talks about assessee. You are clear. Now very easy section. Section 2 clause 31. Who is a person? Now person is very important. Why should we study this topic actually, person? Because the tax rates for everybody is not same. Tax rates actually change based on person to person. Tax rates basically change based on person, and that's why even though everybody may have some legal entity, but they are separated by creating a definition under section 2 clause 31, right? First one is individual, whether it is he or she, female or male, no problem, they are individuals. Okay. Second thing, HUF, Hindu undivided family. You may say that sir individual में और थोड़ा लिखा हुआ है ना? Yes, there is something written about DTs, right? But we will discuss in the 7th point. So now concentrate. Okay, individual means only he or she, that's it. Okay, come to the second point. Married, unmarried, अरे he she ही रहेंगे ना यार in all that cases. Correct. Come to the second point. Hindu undivided family. Now if some family, Hindu family is there, which actually took the registration as Hindu undivided family. Sir, we have a family, we are HUF. Arey na baba na. If you have a family business, you are registered under the Hindu law as a business. You have a HUF, Hindu undivided family's PAN card, then only HUF becomes an independent person. Here actually you can do a lot of tax planning. I'll teach you all that in the topics to come. Anyhow, for simple explanation, I'll tell you. Suppose after few years you got married. You are earning some income, your wife is earning some income. You have some other business also. Now you will pay some amount of tax, she will pay some amount of tax. Once a limit cross, your tax burden increases. As you earn more and more income, you pay more and more tax. How to save taxes? So you create one more entity, and that is your HUF, where you and your wife will become the members. Okay. Now you will get some tax benefit, your wife will get some tax benefit, and HUF also will get some tax benefit. So some amount of taxes can be saved if you create Hindu undivided family. Sir, but can we, are Sardarji Sikh families, can we create HUF? Arey yaar, you are Sikh, you are also Hindus. Jain sir, arey of course yaar, you are also Hindus. Buddhist, yes, you are also Hindus. So Jain, Sikh, Buddhist families are Hindu undivided family only. For them, Hindu law only applies. Okay, right. They can also get the registration. Of course, Muslim Christians no. Right. Chalo. Third point, let's go to understand. First one is individual. Second one is Hindu undivided family. Third one, partnership. Okay, let's discuss company first, then partnership. Okay, what is company? Suppose you have registered your business as a company under the Companies Act 2013. Then your company is a company because you are incorporated, right? Incorporated means registered. Suppose some company is from foreign country, registered in America. Then for us Indians, it is a foreign company, right? So company is basically this. Now all other things you can ignore, right? If CBDT recognize something as company in the past, क्या करना है यार? In today's context, all that is irrelevant. Okay, right. Partnership firm. So you know partnership firm. Partnership firm is a relationship between persons who have agreed to share the profits of the business carried on by all or any of them acting for all. What does this mean? Few people come together and create a business and register it under the partnership law, Partnership Act 1932. Then separate PAN number for partnership is issued. You all know PAN number, correct? Permanent account number. Arey, of course, yaar, like your Aadhaar card is there, your identity proof. For income tax, there is a separate identity proof, and that's PAN card. Okay, very good. So, what we understood, that partnership is a business for profit created by two or more people, right? Even partnership includes limited liability partnership. So, limited liability partnership is also a partnership. Clear to all of you? Very good. Now, we understood individual, HUF, company, partnership including LLP. Fifth one come to understand. Association of persons and body of individuals. Now, for you to understand, this is very easy. Suppose there is a Sikandrabad club. What is this Sikandrabad club all about? Like Sikandrabad club, when I talk about, I'll simply say that here individuals can be members, corporates can be members, even HUFs can become a member. So all type of persons can become a member. So if all persons can associate together, it is association of persons. But do remember, it should be for business. If it is not for profit, it is not association of persons. If it is for profit, for business, for production, for creating something, then only it is association of persons. Next thing I want to ask you, that there is individuals, body of individuals. What do you mean by the word body of individuals? Body of individuals means few individuals come together, right? Like we do Ganesh Utsav Samiti, Ram Leela Utsav Samiti, right? So when we create this type of samitis, their individuals will create a group. Huh? Radhe Shyam, Krishna, Gokul, Gopal, all these created a group and they named it as some samiti. So what do you understand out of this? This is only individuals group. So that's why it is body of individuals. And body of individuals can be even for profit or for social service also. Okay, so profit is not compulsory, business is not compulsory when you create a body of individuals, but for association of persons, business is compulsory. Are you clear? In association of person, any type of person can come, whether it is individual, company, HUF, anything. But in body of individuals, only individuals. Association, business compulsory. Body of individuals, business not compulsory. This difference you should be able to understand. Come to the next point, local authority. What do you understand by the word local authority? Local authority means municipality, your panchayat, your town area committee, your cantonment board, right? You name it, district committee, any type of name may be given. But ultimately, this is created to manage the local operations, local administration. That's why it is called local authority. In Hyderabad, we have Greater Hyderabad Municipal Corporation. You think about Mumbai, Mumbai Mahanagar Palika. So that's how you should remember. Come to the next part. Association of persons, body of individuals, done. Local authority, done. Last one is artificial juridical person. Now don't say judicial, sorry, juridical, JURIDICAL, juridical person. So person में कौन कौन आया? चलो first list, individual, HUF, company, partnership firm including LLP, fifth one local authority, sixth one association of persons or body of individuals. 6 done. Now what is this seventh one? Artificial juridical person. Very easy, my dear student. First 6 whatever are there, if you are not falling under the first 6, then you fall under the 7th. Like I'll ask you that there is something called as Nalanda University, right? Nalanda University, is it an individual? No. HUF? No. Company? No. Partnership? No. Local authority? Not at all. Then association of persons? No. Body of individuals? No. Then what it is? It is artificial juridical person. When you would have heard about the Ram Mandir case, who fought the case? Right? There is a Muslim group, there is a Hindu group, but who fought the case? Of course, sir, lawyers. Absolutely, lawyers only fought the case. But there is a cultural practice, and that practice is, and it is real, that there is a prana pratishta. Have you heard of this prana pratishta? Prana pratishta means in that idol, the power, the divine energy comes. And you would have seen the pics also, that when the Rama's idol was there, first there will be some तेलुगुलो पट्टी अंटारू, हिंदी में एक पट्टी लगाते ना आंखों के ऊपर, right? That will be there. Some cloth will be in front of the Rama, and in front of that some mirror will be kept. And prana pratishta, one step is they remove the cloth, then the energy from the eyes of the idol will flash onto the mirror and the mirror will break. This is one regular practice, and once that ritual happens, then only it means that God has come into this idol. Prana pratishta is there. So what I wanted to convey to you, that when prana pratishta happens, the God himself is alive here, and when he is alive, who fights his case? He only fights his case through the lawyers. So that's why when Ram Mandir case happened, Ram Lala Virajman fought the case, right? He was the plaintiff, right? Very good. So what do you understood? Artificial juridical person means an deity. Hindu temple gods are there, na? Deities in the temple. They are artificial juridical person. In the court of law, they are considered as persons. Sir, what about masjid? What about church? They are places of worship. They are holy places. but there is no concept of prana pratishta, so they are not considered as persons. Their trust handles everything. But here the divine energy is considered as person as per the Supreme Court judgment I am telling. Okay. Now, what did you understand? Artificial juridical person means a residuary person who is not falling under the first six will become artificial juridical person. Even Usmania University is artificial juridical person. The bar council, lawyers bar council, right, where all the lawyers take the membership, that is also artificial juridical person. Are you clear? Very good. Now, person is clear to all of you. Next question I will ask you, that we are studying direct tax. Tax we understood. But in direct tax, there is only one law, income tax. Correct? So, tax we understood. But if I ask you what is income, can you tell? Sir, income is what we earn. Absolutely right. Income is what we earn. We put efforts, right? We give time, and for that we are paid, and that's our income. But income tax has to discuss this in much more detail, because every income should be covered, correct? And some things should not be covered also. For that, section 2 clause 24 is given. Now let me give a disclaimer here. I did not include the section in our notes. From exam perspective, not required. But whatever definition analysis is there, that I have put here, because that may be asked in 1 or 2 marks questions. Okay? Because the definition of section 2 clause 24 itself goes around 2 pages. First thing. Second thing, to understand that definition, you need to first understand minimum at least 5 to 7 chapters. Then only you will understand this definition. So, I don't want to create headache for you at the start itself. Let us understand all the chapters. Then you can just refer the income definition. You will understand. But some practical analysis we can do it, right? So, let's do that. Income can be in cash, correct? You do job, you get salary, right? If the employer pays cash salary or into the bank account, it is also cash. Okay? Even if it is paid into your bank account, it is cash. Sometimes your income can be in kind also. Kind means in goods. Suppose you do job and the employer gave you 50 bags of rice. It is in kind. In this case, it should be valued. Now, in income tax, is there any rule or act or rules do speak about valuing rice bags? No, right? So, market value of the rice bag should be taken as the income. But suppose example, your employer gives you shares of the company. Your employer gives you some rent free accommodation, yani house to stay in. Then for that, income tax act and rules have proper guidelines which you can follow and compute the income. So in that case, income will be computed accordingly. So whether you earn income in cash or kind doesn't matter. Income should be converted to monetary terms and should be counted. Okay. But while counting income, what is the importance of accounting? Significance of accounting? I'll tell you. There are 5 heads of income. That means income tax says your income can be put in 5 heads, 5 different groups. Let's simplify. Okay, you do job, you get salary, your salary income. You do give your property on rent, you get rental income of house property, that is house property income. You do business or CMA practice, then professional income, business income. Third one, you sell your property and earn income, capital gain income. Last one is your other sources income. Other sources means which are not covered under the 4 will be other sources. Your lottery will come under other sources, interest income will come under other sources, your family pension is there, right? All that come under other sources. Now, out of these 5 heads, I said income from salary, income from house property, income from business and profession, income from capital gain, income from other sources. Out of these 5 heads, there are 3 heads where accounting methods doesn't matter, like income from salary, income from house property, income from capital gains. Income from salary, income from house property, income from capital gains. These 3 heads, what method you are following in your business doesn't matter. Let's leave it. But there are 2 heads like profits and gains of business or profession and income from other sources. For these 2 heads, what method you follow in your accounting practice really matters, is obviously relevant. Okay, so if you follow cash basis of accounting, then your income tax documentation, your income tax payment, your income tax return filing, all will happen on the basis of cash basis. Your income computation will be based on cash basis. But suppose you follow accrual system of accounting. Now, if you have studied 11th class legally, you know accrual system of accounting, mercantile system of accounting, correct? Where you record whatever is due, outstanding, right? So, all that you will record. So, what does this mean? If you follow in accounting the accrual concept, then in income tax also, for PGBP chapter, profits and gains of business and profession chapter, for income from other sources chapter, you should follow accrual. So in accounting you follow cash, then in these 2 heads you follow cash. In accounting you follow accrual. Here also in 2 heads you follow accrual. That's what. Okay. Sir, can we follow both? Sorry. You either have to follow cash system of accounting or have to follow accrual system of accounting. But one point I will put forward, that under income from other sources, all incomes come under this concept only. But dividend income is taxed differently. Dividend related income, its assessment, its computation is totally different, which we'll discuss when the chapter comes. Okay, chalo. We discuss 2 points under income definition. First, it can be in cash, that is either physical cash or through bank, no problem, or it can be kind. Kind means in goods or in the form of service. Okay, if it is in kind, it should be converted to money. If there are proper rules under income tax, follow and put it in monetary terms. If there are no income tax rules for that, like for rice bags, then take the market value. But income should be computed in monetary terms in case of income tax law. And significance of accounting methods, of course, there are 3 heads: salary, house property, capital gains. Which method you follow in accounting doesn't matter. But there are 2 more heads like profits and gains of business and profession and income from other sources. For this, whatever method you follow, income tax will follow the same for these 2 heads. You follow cash, they follow cash method in income tax. You follow in accounting accrual method, in income tax also accrual method. But for dividend, this principle doesn't apply. Next question. Third point. Third point which I have to tell you is that notional income. Can you earn income from yourself? The answer is no, right? So that's why I am telling, income earned from himself or own self is not at all an income. If you earn income from yourself, it's not an income. Do remember this. Clear? Very good. So if you earn income from yourself, it's not an income. Clear? Very good. Now come to the next point. Fourth point which I wanted to tell you, if you earn income from yourself, from own, that is notional income, and income tax don't consider it. If I talk about accounting, suppose Reliance is a company, there are multiple departments. So each department has to prepare its own profit loss, correct? So even transactions happen between the departments in Reliance, they consider the income to show departmental performance. That's okay in accounting. But in income tax, no. Income tax simply say you cannot earn from yourself. There is no notional income to be shown under income tax. Okay, very good. Next thing, sources of income. Now you can have permanent source of income like your salary, your rental income, your interest income. It is permanent. Till your money is there in the bank, you will get interest. Till your tenant is there in the house, you will get rent. Till you are in the job, you will get salary, right? So these are permanent sources of income. But sometimes there may be temporary sources like lottery income, or you have done some casual work, right? Suppose I got some seminar and I went to the seminar and gave a seminar, earned some income out of it. So these are all temporary incomes. So source of income can be either permanent or source of income can be temporary also. Okay, very good. Clear? Understood? Nice. Now there are two more concepts. One is capital and second one is revenue. Now whatever comes in your P&L account from accounting perspective, that is revenue. Whatever comes in your balance sheet is capital. Clear? Koi confusion? No confusion. Whatever comes in your balance sheet is capital. Whatever comes in your P&L account is revenue. Right? Now, which income should be taxed? Generally, revenue income is taxed. But sometimes income tax department say, okay, we'll not tax this. Like example, agricultural income is revenue. But still government says, sorry, we'll not tax. Okay. So generally revenue receipts are taxed. Okay, generally revenue receipts are taxed. But some cases like agricultural income or export income, they are not taxed. What does this mean? So generally every revenue receipt should be taxed. But if they specifically said, let us not tax it, let us exempt it. So when I use the word let us not tax it, that means let us exempt it. Then it is not taxable. Okay. So generally every revenue receipt is taxed, but some specific circumstances are mentioned in income tax law, and in that case such revenue receipts are not taxed, like agriculture income, export income. Now let's talk about capital receipts. Generally, now whatever we talk about revenue, exactly opposite for capital. Now suppose you invested money in company. For company it is capital, correct? Do you feel that company should pay tax on capital received? Or company took loan, it is also a capital receipt, should company pay tax on it? No, right? It's not income. Absolutely right. So generally capital receipts are not taxed. Generally capital receipts like loan received is a capital receipt, right? You started a company, you got investments, it is a capital receipt for the business. These are not taxed generally. But if there is a specific mention that this capital receipt should be taxed, like example, when you sell your property, that sale consideration of property is taxable. Okay, are you able to understand? Detailed computation we'll discuss when it comes, but sale of property, sale of jewelry is taxed, and that is mentioned in capital gains chapter, which we'll discuss later on. So what did you understand? That generally capital receipts are not taxed. like loan received, capital received, okay, they are not taxed. But if specifically mentioned under Income Tax Act that this should be taxed, then yes, it would be taxed. With this we understood so many things. Let's continue. Now when we talk about income, is it always a positive income is income? If we really earn income, is it income? Yes. But if there is a loss, that is also income. So what government said, that in case of earning income, we collect something from you. If you get loss, then government should support, correct? So that's why government said that negative income is also income. How will the government support? I'll discuss later on. Okay. So income includes plus as well as minus. Right? Very good. Next thing. Okay. Sometimes you receive lump sum amount. Of course, what's wrong with it? Suppose I went to a college, I took 3 months total seminars, workshops, and all. They gave me lump sum XYZ amount. Of course, it is my income. I worked for it. It's my income. I invested some crores in share market and I sold all the shares and earned some income. It's a lump sum receipt. Of course, it is taxable. So, to tax it, whether it is lump sum or recurring doesn't matter. Is it an income? That's what matters. And how we can say it is income? Generally, every revenue receipt is income. If specifically they exempted it, then not an income. Generally, every capital receipt is not income. But if they specifically mentioned that it is income, then yes, it is income. And same applies with lump sum and recurring. Okay, very good. Now come to the important thing. We understood loss. We understood lump sum, right? Lump sum receipt. Now, disputed income. Is disputed income an income? Of course, if there is a dispute, obviously if there is a fighting between the parties, it is an income, correct? Income is there. Who is the real owner of that income is not clear, but it is an income. So government says, okay, let your dispute be solved. No problem. But first, who received it should pay tax to the government. Okay. First, who received it should pay tax to the government on such income. Later on, all things will be sorted. But first, the government wants its money, that is tax. Okay. Very good. Now, can any income be double taxed? Each income should be taxed once only. There cannot be any double taxation. Okay, each income should be taxed one time only. So double taxation is not allowed. Okay, you may also ask a question ki sir, okay, income should be taxed once, but sir, income can be illegal also. The answer is yes. So legality is one concept which says your income can be legal or illegal. Income tax department is least bothered about it. Income tax department simply say you earned income, you pay tax to the government. If it is a criminal income, income tax department will not only collect tax but share the file with police also. So further police will take care, right? CBI will take care, ED will take care. ED full form मालूम है ना? Enforcement Directorate. Okay, so whether your income is legal or illegal, for income tax doesn't matter. Okay, let's continue with the next part. Now, reimbursement. Suppose you spend some money for your organization. Suppose you are doing a job in a company and company had to do some expenditures. You paid from your pocket. The company paid that money back to you. So can we say it is reimbursement? The answer is yes. Reimbursement of expenses is not an income. If there is a reimbursement of expenses, we cannot call it as income. Okay, very good. Now There is a concept called as income by way of mutual activity. Suppose if there is a mutual activity, they are coming together and doing some mutual activity, like mutual chits are there, right? Chitti chalate na log. That mutual chits whatever are there, they all form 20 members group, right? 10 members group, contribute every month some amount, and then whoever is in need will take the money, and whatever profits are earned shared amongst all the members. So this earning out of the mutual activity is not at all an income, right? It is based on the principle of mutuality. All the members are treated as one. So if they contribute money, they help each other, then share the surplus if any, it is not at all an income. But if it is a banking company doing this, insurance company doing the same, or trade professional organization under section 28 clause 3, 28 section 28 clause 3, then yes, it will be income. So generally income by way of mutual activity is not treated as income, but if this scheme is run by banking cooperative society or insurance cooperative society or any trade or professional association, because in these three cases what happens is bank has its own independent entity, right? Insurance cooperative society has independent entity, trade professional association has independent entity. That's why the income by mutual activity is taxable. Now generally what happens, when they create a mutual group, there is no separate entity for the group, correct? There is no new legal status created. So that's why generally income by way of mutual activity is exempt, not taxable. But if it is banking company, banking cooperative society, insurance cooperative society, or any trade professional association under section 28 clause 3, then yes, income by mutual activity is taxable. Now you may ask me about pin money. Sir, wife gets some pocket money from me, sir. She saves lot of money, but demonetization, all money came and she gave back all the money because to deposit in bank, right? So anyhow, what did we understand? So pin money is husband gives certain money to his wife to maintain the household expenditure. So is pin money an income? The answer is absolutely no. Okay, very good. So pin money is not at all an income. But I'll ask you second question. If the wife saves all that money, then gives the money on interest and earns some interest income, then that interest income is taxable income. Okay, very good. Now we understood about pin money also. Let me talk something about awards also. Is awards an income? Suppose a cricketer plays cricket and wins the man of the match award. So for him it is professional income. A businessman gets certain award for excellence. It is business income. But this business income, professional income in the form of awards are taxable. But all other awards all depend upon which category they are. Like example, Bharat Padma Bhushan, Padma Vibhushan, such awards are given by government. They are not taxable, fully exempt. But many other awards are taxable. So we have to see case by case. But if award is in relation to business or profession, they are simply taxable. This much you should remember. Clear? Shall we go forward? Now embezzlement. If somebody has stolen some cash, it is taxable? Yes. Legal income, income. Illegal income, income. embezzlement, chori hai, cash ki, right? If he has stolen cash, that is also income. That is also taxable. Okay. Contingent income. Do you know what is contingent income? Doubtful. You may get the income, may not get the income. So getting income is not sure. If not sure, not certain, then we'll not call it as income. We'll not call it as what? Income. Okay. So if it is contingent, doubtful, not an income. Subsidy. What do you mean by the word subsidy? Tell me. Government or some other organization will give some money to you for a cause. That is subsidy. In that case, is subsidy taxable? The answer is, if government has exempted such thing, then it is exempt, then it is not taxable at all. But if government has not exempted it, then of course it is taxable. Then of course it is taxable. Clear to all of you? Yes or no? Very good. So subsidy, I'll tell you what happens is, if suppose subsidy is given for an asset, right? You purchase some asset, government gave you subsidy. Government is giving a lot of subsidy to businessmen. So you purchased an asset, government gave subsidy for that. So whatever government paid will be reduced from your cost, correct? Your cost for purchasing the machine is suppose 100 crores. Government gave 20% subsidy. So now 20 crores is government subsidy. So how much actually you paid? 80 crores, correct? 100 is the cost, 20 is the subsidy minus, and then 80 is the balance. Now on 80 you can claim depreciation, right? On the assets we claim depreciation, right? In accounting also we get the depreciation. In income tax also we get the depreciation. We'll discuss in detail in the next chapters, don't worry. Okay. So what did we understand? If any subsidy is given in relation to an asset purchase, then that subsidy is not at all taxable when it is reduced from the cost of the asset. Okay. And sometimes if government has specifically exempted such subsidies, then also it is not taxable. In all other cases, subsidies will also be taxable. So we understood all these things about income, about assessee, about person in detail. Hope you enjoyed this lecture. I'll tell you in the next lecture we are going to discuss much more things. How your income should be computed, right? What is the whole process of computing your income? Next lecture will be super exciting for you. So do listen to the lectures and don't waste time at all, because this time what you are in is the most valuable time. So stay focused and definitely you are going to achieve great heights in your life. In your exams you are going to become successful. So let's meet in the next lecture. Take care.